Hello, friends. I think you had some issues with earlier streaming and were not able to see me at all. So hopefully you're able to see me and hear me okay. I don't know. I think from the last couple of streaming, the streaming software hasn't been working fine. So, but anyways, we'll get started, guys. So what we'll be discussing today is about uh, intercompany setups, intercompany configurations, and how do you do it. So let me just share the screen, and we should be make it rolling, guys. Give me a minute. Okay. All right. So, those of you who are familiar with intercompany, so that is something we are going to cover today. And okay, so let me see if you are able to see me now. Okay, desktop business presentation. All right. So, okay. Guys, so let's right away get into the configurations and what is intercompany and how do you set it up in the system. So we will go deeper into it. Okay. So those of you who do not know me, I am Som Prakash. I am a tax technology consultant and tax technology business analyst. And so what we'll be covering today is about intercompany. Okay. So our topic for today is we'll be going through intercompany versus intracompany. So what is the difference, in these two scenarios? What are these? And we'll talk about the master data. How do you set it up in the system? What are the master data is needed to be set up in the system? Then we'll discuss about the configurations, what is needed, and also the process steps, what process you need to follow. If you are a consultant, how do you test it? Or if you are an end user, how you are going to execute the scenario in your system. So let's get into the intercompany versus intracompany movement of own goods, or movement of goods. So let's clarify this. So in this scenario, we are discussing about one group entity, which is in this case ABC Group Incorporate. It's established in the New York City, in the United States. So that's a group entity. That's in the SAP terms, this is a company. Okay, if you remember, earlier we discussed about company and company codes. Company codes are the legal entity, company is the group entity. Okay, so that's the group entity, which is in, for example, Coca-Cola Corporation in Atlanta, Georgia is the group entity. They have operation in the UK, the United States, different countries in Europe, Asia. So that's how we are discussing here, is that ABC Group Incorporated has operations in, let's say, two different countries with two different legal entities that have been set up. One is ABC Limited UK, another is ABC GmbH in Germany. Okay, so GmbH is in Germany. They have just like limited liability company, and in the US is incorporate. Germany is a GmbH. Okay, so in Berlin. Now, what is intercompany? Let's understand. When there is a transaction or a movement of goods between two different legal entities, that is where the requirement or tax compliance and reporting requirements comes into play, whereby one legal entity, the ABC Limited UK, is moving its own moving goods from UK to another country, that is Germany. Okay, so it has to comply, the rules and regulations of both the countries, in the UK and in Germany. Okay, so that means when you have rules and regulations, the movement of goods, there is an element of transfer pricing here as well. So what price you move the goods, because that has to be for, the goods are valued, and what price you value. There comes the pillar 2, and the minimum taxation, minimum corporate tax, as you know, OPEC countries, and and well, I think most of the countries are now coming under the pillar 2, or the minimum taxation requirement. So what price you move the goods, that is determined, or that is based on, again, a corporation's own pricing policies, or they how do they want to um, frame, or how do they want to price their products, so that they can take advantage of best benefit, tax advantage, and the advantage in the both domestic markets. So that is where the tax professionals come into play to derive and decide the price part of the product. But intercompany, you understand that when the goods move from one country or one company to the other company, okay, it may be same country, maybe different countries, but that's where intercompany movement of goods happens, and there is compliance and regulatory requirements are there. Now, in the case of intra-company, if in the example, as you can see, ABC Limited UK, now they are moving moving the goods from, let's say, plant A to plant B. That is intra-company, as the name suggests, as intra. Within the company, we are moving the goods from one plant to the other plant. So when the movement happens of one from one plant to the other plant, which is an intra company, there as well, even though this is a legal entity is one, and it happens from one, it's kind of a taking your money from one pocket, you are putting in another pocket, that kind of a way, it happens. But again, there are complexity as well of how SAP can handle it, because it's kind of an area where if it's two different countries, it happened to be two different countries where SAP has something called plants abroad functionality, and multiple plants in different countries, so we have to go for the plants abroad functionality to make that solution work. So we are not going to discuss about that functionality or that setup today. What we are discussing today is about the intercompany. That means within two different legal entity, if the goods move, how do we set it up in the system, and what are the things required, and how the process look like. Okay, now, so we'll discuss about the document type. Here is NB. That means, document type, to discuss about the purchase order or STO, stock transport order scenario. We'll discuss about that as well. But we are going to discuss today about the intercompany goods movement. Okay, and that is where the transfer pricing as well. For transfer pricing purpose, this is an extremely important area where you have to understand the impact of it. Okay, so now let's understand the intercompany movement of own goods. So we'll discuss about two different scenarios and how this is usually happens in the real life scenario, okay, or real life circumstances. So now this scenario is a sales order driven scenario whereby ABC Limited in the UK now creates a sales order for its customer. That's the customer, as you can see in the right side, that's the customer. It's a sales order. A sales order is the primary or the first document, or initial document, sales document. It triggers multiple other delivery documents and billing document subsequently. But this is the scenario where there is a sales order, two sales order has sold to party, bill to party, and ship to parties. So that means you define those different different elements, or these are called the master data. Okay, it will be set up and used in your sales order. But the unique thing about this sales order would be that ABC Limited doesn't have the stock in its warehouse or in its plant. So what it does, it gets the in this sales order, it uses the plant ABC here. Okay, in this example, if you see, this is the plant ABC of ABC GmbH Berlin. So that means that's the German company code or German legal entities plant is being used in this scenario. Okay, so if this happens, so German entities plant is being used. So this is where, okay, the delivery is happening from the Germany entity or the German plant to the customer directly. However, the German entity is not going to bill to this customer. Why? Because this customer is the customer of ABC Limited UK. It's not a German entity or ABC GmbH customer. Okay, so that then what would this company or this legal entity do? Is they issue an intercompany billing document. This is where the intercompany transaction happens. Or they will raise a billing document. They will invoice that, hey, we delivered the product for your customer, because you are two different legal entities. Even though we are a part of the same group, you have to understand that is a part of the same group, but two different legal entities. If this happens, two different legal entities, but within a same group, that is where the intercompany scenario happens. So then, so this German entity, it will be billing, okay, raising an invoice on the UK entity. Now, this scenario, when they issue a bill, that's called intercompany billing, and this is a third-party billing. Okay, this is an intercompany. This is a third party, because these are kind of this bill is issued to a customer, which is a third-party customer, not a intercompany customer. So this is how the cycle looks like. Delivery happens directly here. This is an intercompany billing. This is third-party billing. Okay, and every billing document, as you know, has a financial posting as well. Okay, every delivery also will have a financial posting. Okay, what is the financial posting? The posting would be as soon as the goods is issued, then there will be the stock goes down. That means stocks gets credited. Cost of goods sold, COGS, it gets debited. So those of you who understand accounting, you would appreciate and understand that this is how the accounting transaction happens, okay, on the back of this delivery document. However, on this billing side, okay, what happens there is it's a customer, you are selling to a customer. That means the customer gets debited and the credit goes to the revenue account, okay, because this is an income. So you are going to, this is the sales, okay, so that's where the revenue account gets credited. So now you understand the accounting entries, okay, how it happens in the both the entities, for the German entities and for the UK entities. Okay, hope it makes sense, and hope it's clear. So that means this is kind of an automatic, this posting of intercompany billing. It happens on the back of this delivery. Okay, so in the, and SAP allows you to create a sales order, okay, by this entity ABC Limited UK's, in their kind of books of accounts, or in their sales process with their sales organization. Okay, the sales organization in SD module and sales and distribution module, which takes care of, which handles the sales and distribution process. They have the sales org, distribution channel, division. This is called sales area. So these are kind of a different fragments or different elements, how you track, what you sell, how you sell. Okay, so these are all nothing but sales, organization, distribution channel, and division. Okay, so SAP allows you to use another plant which is owned and which is linked to other sales organization, so that can be used for these third party sales. Okay, and on the back of it, there is an intercompany billing. Okay, hope it makes sense to you guys. Hope you are you understand how this happens. Okay, so now let's move on to another scenario. Okay, this is the scenario where, unlike the first one we discussed in intercompany scenario, intercompany movement of goods, where or intercompany billing, where goods are moving from directly from one entity to the end user or end customer, and these two companies are now raising billing and invoicing, or AP document is created and AR document is also created on the back of it. So now we are discussing about another entity whereby now this is not a direct shipment, or the shipment doesn't happen, or ABC GmbH is not shipping the products directly to the customer, but what it is doing is it is stock replenishment. It's asking for the products or the materials, because it is running low on material. It is placing a purchase order or a stock transport order on ABC Limited UK to get the products in their plant or in their warehouse. Okay, so that means there would be a movement of goods between these two entities. Okay, so now if you see here, there is an STO, stock transport order, is nothing but a purchase order. So you are raising a purchase order for goods to be delivered. Okay, by another entity. Again, these two entities belong to the same group entity. When intercompany comes, that means there has to be clear in mind that the group entity is the same. It's intercompany. Okay, within two different companies of same group. Okay, so in this case, how it happens and how the process works, this is something we will be discussing in detail about how this master data is set up, how the configuration happens, what kind of a configurations goes in the system, how process involves, what is the process involves to book, to incorporate, to record these intercompany transaction or intercompany billing in our system. We'll discuss about that as well. Okay, so now let's discuss about master data. Okay, now master data, those of you do not know, or who are, because there are people who may be not kind of a technology savvy, or you don't know about SAP, or you must have heard about it. So master data is something which is unlike a transactional data. It is used in a transaction. Okay, on a repeated basis. That means once it's created, it's hardly you will be changing that, and you are using those in a transaction which happens regularly. Okay, and that is what we are going to set it up first. So now we discussed about the scenario. Right now we are discussing about an STO or a purchase order we are raising on an organization. Okay, another entity which has the stock what we want. Okay, so that is what will as you can see, that what kind of then the master data will be using. One is a material master. What is a material master? That means the transaction will be using a material, whatever the material you are going to order. Okay, so that is what is a replenishment stock. That means we want those materials. So that's, here comes the material master. Second is we'll discuss about the vendor master and the customer master, or the trading partner in a minute. But material master, as you understand now, it is the same material in this scenario. In this scenario, same material is being sold by one entity, is being bought by another entity. Do you understand now? So sales and purchase of the same material. So what does that mean? So that means same material will be used for procurement, that means here comes an SAP concept of extending that material, okay, to a specific customer and a specific vendor. But now you can see, the material master is created here. Okay, now you can see material master sales org view. So that means this is, from the selling perspective, when you are selling, this is, the setup wise, you can see the sales org here, sales organization, distribution channel. This is from the sales side perspective, the entity which is selling, the organization which is selling from sales org perspective, which is again, sales org are connected to a company code as well. But this is how it looks like. You are creating that material or extending that material for a sales organization. Now this other side, the material is also being bought. So that means that same material is also created in a purchasing view. Okay, so purchase. Okay, so that means procurement side, inbound and outbound. Okay, so now you understand that the material master, how is set up. Now let's discuss about the business partner or trading partner. No, business partner is the right terminology for in SAP. So how the business partner, which in earlier version before HANA came in, it used to be the customer master and the vendor master, and then SAP came up with the concept of trading partner. But trading partners, who are they? So they're nothing but customer and vendor, or again, I'm taking on trading partners as business partner. Okay, sorry. The business partners are customers and vendors, that is supplier and the consumer or the customer. So that's what it is all about. Now these are something which we create, in S4HANA. If you, as you know, that these are something, one BP as a transaction code. You go to business partner, but you can create, or you can see both customer and vendor in the same transaction, but in different BP role. Okay, change in BP role. But one thing very important here is to take consideration, you have to understand it here, is this plant. Okay, so that means this specific vendor, right? It's a vendor number. So this specific vendor is connected, okay, to a specific plant. Okay, so you have to understand now the plant is where. So one plant, from one plant to the other plant, the goods are moving. So these are not exactly the customer or vendor, because why? Because they are the same organization, but they are represented by plant. So that means there has to be a connection, and this is where we are connecting the business partner with a plant. Again, the same from customer point of view. As you can see, there is this field here, delivering plant. Okay, so that means when you are selling, there has to be the delivery has to happen from a plant. Okay, that is a delivering plant. Okay, and this is the receiving plant. Okay, from vendor and customer perspective. And now you see there that material, that business partner is extended. Okay, it is created under sales organization or sales area. Okay, sales area are nothing but what we discussed: sales or distribution channel and division. Okay, so now it's to be clear that purchase, from a point of view, it's the vendor is what is created. Sales point of view, the customer is created, and both of them are linked to a plant. Okay, so now let's move on to, and the next element is assigning shipping point to plant. Okay, so now in an IMG, we are talking about IMG activity or configuration activities. What we say is IMG. Okay, so in the IMG activity or configurations, okay, which are again different than the material, different than the master data. We discussed about the material master. We discussed about the business partner, which involves customer master and vendor master. Now we are moving on to the core configurations. Again, what are configuration? Because somebody was new last time was asking about, can you please cover it to someone, for someone who is very new. Okay, so configuration is nothing but, again, just like master data is used in a transaction, similarly or exactly the same way, configurations are also used in a transaction. Okay, and configurations are nothing but functionalities. We are building in the system to automate the process. Okay, why are we using ERP system? That is an automation. Okay, so we want the automatic determination and derivation, and that is what is done through configuration or customization. That's called IMG activity. Anyways, so assigning shipping point to plan. Now you can see under enterprise structure and under the assignment, as you can see here. Okay, and logistics execution assigns shipping point to plant. Okay, now this is the plant. For example, this is 9996 is the plant which is now assigned to shipping points 9996 and 9997. Okay, so that means one plant is now extended or assigned to two different shipping points. Okay, so that's the configurations. Again, the shipping point, where will we use? We'll see that in few minutes now. Now the next configuration is your sales or distribution channel is assigned to a plant. Here the selling organizations or selling entity is connecting the plant with its sales organ distribution channel. So now you understand that from selling perspective, we connected the material, we connected the customer with the plant. Okay, so that means that connection has to be clear in your mind. That has to be there. Now what we are doing is you're connecting the sales or organization with the plant. Okay, now that shipping point, what we discussed earlier, is now shipping point and plant combination. As we see here, shipping point and plant is now again is a further configuration where we are connecting it with the shipping condition and a loading group. Okay, so these are all the configuration of connecting. Okay, so that you'll be using that in a transaction when we are processing a transaction. Next thing in the configuration is we are connecting the plant with customer and sales area. Okay, again, where exactly we will be connecting. Now you can see here, okay, a plant is connected to a customer number of the plant. So that means representation of the plant as a customer is reflected here. And you can see sales org, a distribution channel, and a division is all here, which are nothing but sales org. So you understand now the plant is now connected to the sales area, and also the representation of plant as a customer. So these are all the connection or the assignment, and the connection has to be established before we execute the transaction. Okay, in the system. Okay, so it's defining the shipping data for the plant. Okay, so we are defining it here. Now the next activity is plant to delivery type assignment. Okay, again, the plant delivery type, so you can see here is the delivery type is NLCC. Okay, NLCC is assigned to the plant here, or procedure by plant. So now you can see is that 9996, okay, is getting assigned with a document type NB. Okay, now 9996, as you can see, the plant 9997 and 9996 are the plants which we have seen here. 9996, you can see here 9996. Okay, so these are the setups. We are now assigning the plant to a delivery type. Okay, so now NLCC is now extended. Now that is another configuration is needed as well, whereby we are connecting delivery type availability check procedure by plant. Okay, so this is where the assignment happens. Now we'll discuss these configurations are all done, and we are now just connected all the dots now. Okay, now we are going to process by a transaction by connecting all the dots. Okay, what happens in the process is first you check the stock. Okay, because you are going to place an order, replenishment order we are discussing about. on another plant owned by another legal entity. So that means we have to make sure that the stock is available before we proceed ahead to create a purchase order. So that is where MMBE is a transaction where you check the stock, whether it's available in a specific location, a specific plant. Then we create a purchase order. Okay, purchase order is what? As the name suggests, order we created to purchase. Okay, is where the vendor, from specific vendor, we are asking or ordering some products for us to be used. So creating a PO or STO, you can say, stock transport order is nothing but a PO as well, or kind of a PO. So ME21N is the transaction code for creating a PO. Then creating a delivery. So that means you are creating, after you create a PO, is a delivery, and PGI, post goods issue, follows the creation of the PO, and then the goods are received into the receiving entity, because this is a purchase you are purchasing. That means goods has to be received, and then happens another two financial transactions which happens after the goods movement, is the billing. So that means is the invoicing. So for one entity, they say AR, accounts receivable, accounting posting, and for the other one, it's the AP, because they will be paying. It's a liability. It's a paying. They have to pay to the other entity. So this is the transaction process, or this is how you are going to now see the different screen to say how it looks like in SAP itself. Now you see the PO creation here. There is a PO created. Now you can see here delivery type is NLCC. We discussed about that. So that means automatically it is derived based on the configuration what we saw earlier when you are creating a purchase order. And purchase order has what? What are the information usually purchase order captures? As you know, vendor is the most important. The NBE, standard PO, NBE document type we discussed earlier as well. And how many we want? 10 quantity. So that means we have already checked. We would have already checked the quantity is available with the vendor plant. Okay, at the vendor plant. N2. So this is the sender, and this is a receiving plant. Okay, what is that? 9997. Okay, where the goods will be shipped to, or wherever it will be stored. Okay. So now you see here, there are the sales organization data. So that means under the shipping tab, you will see all other information like delivery time, shipping point. These are all the configurations which already had done before. Now we are seeing those, coming down automatically on a purchase order based on the configuration what we did. After the purchase order happens and 9997 is the where the plant will be delivered. So we have to now move on and create a delivery. Okay. So delivery is the, when the goods, movement of goods happens, and then we have PGI does, post goods issue. Okay. So now, as soon as you do a delivery, there's another tab opens in your purchase order. It's called purchase order history, where you see the entire flow. Okay. So what it happens is subsequent to the purchase order creation, what are the other things associated with that purchase order? We can check those here. Now you can see delivery note. There is a delivery note being created, and there's a goods issue document has also been created. Okay, so these are the trace of the documents. You can see it here along with the PO number we see it here. Okay, so these are the important kind of a documents, or multiple documents is created on the back of one specific transaction or document. Okay, so now next thing is the billing. Okay, so what is billing then? Billing is when you invoice. Okay, because the goods are delivered now, as per this cycle we see, goods are delivered, but that's the time for our asking for payment. Okay, so that is where the billing happens. That's the next process. You bill the customer, who is, in this case, your customer is the other legal entity. Okay, so you bill, or the company bills the other sister concern. That's the billing document. And subsequent to that billing document, this is AR, it triggers a accounts receivable accounting posting. That is also an accounts payable accounting posting also happens on the back. That's the purchase invoice, or okay, that's the payable. This is receivable. Okay, so as two different entities, one is receiving or will be receiving, another will be paying. Okay, and then when the entire sort of cycle is finished, you can come and see the purchase order history is now complete with the delivery note, goods issue, invoice receipt, and goods receipt. Okay, so now you'll have an idea of complete total picture of how did it go, and how the what are the documents are all created in the entire process. Okay, so now hope it made sense to you guys. Hope you understand the concept of intercompany billing. Okay, how it happens, and what is the process in the background. If you have any questions, I know that we'll be finishing a bit early today, but if you have any questions, feel free to message me. I'll be more than happy to answer your questions. And if in your organization, if you are ordered to also, or you have the complex intercompany scenarios, and you want to learn and know how you can also benefit out of the SAP's intercompany configurations and the process, so then you can reach out to me and should be more than happy to help you. Okay, so with that, I am pretty much done, and over and out, guys. Speak to you soon. Bye bye.